Hello, everyone. It's May 17, 2021, and we're going to tell you about how to rebalance your portfolios. Today's category and market stream update is about portfolio management. The first strategy that you have to put into your positions is rebalance your portfolios by adding movies, department stores, air, travel, and sports events. That would be related to AMC, the likes of Nordstrom, Jets, Airbnb, DraftKings, and Penn. I'm going to show you the charts later on. The other strategy that you have to do is you have to keep on selling or underweighting your technology names in this oversold rebound. They will continually to be sold off in the short term, which will necessitate a strong sell on rallies if they rally 10 to 20% this week on an oversold bounce. But you have to also prepare to short them if they rise 30 to 50%. No matter if you like them fundamentally, secular wise, you have to sell them if they rise 10 to 20, short them 30 to 50% higher. My estimate is that the Nasdaq would rally about 13.6 to 13.7 this week, or perhaps about next week until next week, and then consequently fall down perhaps about 12,000 region. If you want to collect the brunt of the tech sell-off, likely approximately, if I'm going to time this, approximately July 2021, my guess is it will coincide at the top of your reopening names. It will coincide with the bottom for technology names, and that will be about 1 to 2 months away from today. That means as well that your ARC Genomics, your ARC Innovation Funds, and all those related high growth names will continually to be sold off on a rebound this week. They rallied very ferociously last week, last Friday, but it's possibly that it's just an oversold rebound, and then there will be a lot of people who would sell onto this rally, and they will reposition their longs about reopening movies, sports events, and so forth. For movies, I chose AMC, although you can argue movies, theaters, theme parks, that's AMC, Disney, HBO, which is AT&T. Could even consider Comcast, CMCSA, which is also the owner of Universal Studios. For sports events, I prefer going through DraftKings and Penn National Gaming. Take note, though, that I like DraftKings and Penn both 2 times. I like the fact that DraftKings is something that you can use on when you're at home, and the resumption of sports events will definitely make betting a great thing. So DraftKings and Penn National Gaming, Penn National being the owner of Barstool Sports, I'm playing along on those names, especially after they consequently fell 40% from its peak, and is actually an reopening play, similar to hotels, Airbnb. I find Airbnb at $140 two ways. I like DraftKings and Penn. I also like Disney and T. They are my preference for reopening, but also my secular play winners, because while people are only seeing DraftKings and Penn National Gaming as a sports event reopening theme, I'd say that secular-wise, they're also the leaders in a new industry, given that the new industry is not just gaming or gambling, as in going for poker or blackjack. The new casino in the world is actually betting on esports and sports. And therefore, I didn't even post here esports. GMBL, which is a play on esports, is also going to be a buy. You want to actually add into your Disney and AT&T. It's both theaters, theme parks, and well, of course, T here, you might be wondering why I put T. T is actually telecom, AT&T, HBO Max streaming. So you have actually the best of both worlds there. Hotels, I prefer Airbnb. I don't want to enter Marriott or Hilton hotels, etc. I just prefer Airbnb for my hotel portfolio. In terms of public transit, I'll prefer Uber and Lyft. But within the two, I'd say that actually both is fine. Air travel, the public transit and air travel will just be trades on my end. Uber, Lyft, DAL, UAL, EL, and Jex, because I think that these are just reopening related names. This will help your portfolio rebalance to a more balanced portfolio in the next coming months. So take a look, this AMC, last week actually from 10, rallied already to 14. I think that this dropped about 11, 12 is an entry opportunity, as the market will continually be afraid to short AMC, and they will actually, even the meme stocks will trigger a buy on AMC Entertainment. So I'd argue that after a rally here, notice this was the GME move, 2 to 20, dropped about $5, rally to 14. Although there's a strong resistance at 14 and 16, I'd say that AMC at about $12 below still has a buyer. DraftKings is my preferred play. Sports events, I like secular trend, and I like this one as a cyclical trend. So this one matches, checks all of my ticks, all of my boxes. Number one, it's already oversold. Notice that it's dropped already from $72 to $42. No change in fundamentals. That's why I like DraftKings here. And you get this reward of at least 56 or at least 40 to 50%, and with a potential rally even all the way to 72 in case this reopening of sports events continues further. So this is how I play sports events resumption. Of course, everyone already knows that sports events have resumed. It's just that I feel that the more sports events resumed and the more we go back to normal, DraftKings will be the best way to play it out. Very strong movement last week of 9% means that this can rally to about $52, not just next week, but in fact this week. Penn National Gaming is Barstool Sports. There was a lot of scandal on Davey Dave Portnoy, this sex tape scandal, which really has nothing to do with Penn National Gaming's viewers. And therefore, just like any human being, I'd say that people sold off Penn National Gaming not because of fundamentals, but really because it already went more than 10x. Notice as this was about $4 to 140 or approximately 30x. This drop of 47% is just a normal profit taking. And I understand that this 80 could have a resistance here at 100. It's not a full reset unlike DraftKings, but I'd say that the premium is perhaps warranted. And then any drops 80 to $70 or even at 50, $60 will be bought because of Barstool Sports. So there's definitely a brand here that you're paying for a premium in Penn National Gaming, just like how you're paying for an Airbnb, which I'll show later on. Disney is a brand that we will pay a premium for. Therefore, at $170 all the way to $160, it still represents a reopening theme and also a secular winner in the streaming zone and really a cash flow machine. So Walt Disney will continue to be a buy no matter what. So buy this at 170 to 160. I showed you the AT&T because HBO Max streaming is very much a movies and reopening play. And also, you'll notice it has a fat dividend yield of about 6% if you bought it at $30. So even at $32, it still is a good yield, about 5%. So there will be people who would still flock into AT&T, both as a reopening and a streaming play. So they're buying it on the movie resumption, etc. And even telecom, just the 5G play. You'll notice also that many people are going to do revenge travel the next 2 months. And while this has already rallied from 20 to 55, I'd say that people would continually buy it, as evident last Friday and Thursday. The market already bought United Airlines at $52 and closed at 55. So chances are, at the very least, this rallies back to $62. Same thing that's going to happen for Delta Airlines. A strong movement last week of 5% from 44 to 46. Do think that Delta Airlines is going to go back to 55 or 52. At the very least, it's going to retest these short-term highs. American Airlines will also retest this 26 high, and I think this 22 is going to go back there to 26. This has been a full reset. This is a shallow retracement. It means that the momentum for the reopening is still very much strong, and that was just a profit-taking move from March, April, May. This June, it's going to go back to about 25 to 26. It means that global JETS ETF will continually to go up from about 26, will rally about 27 and 30. If you plan to short, however, you'll wait till about June, July for it to really top out here at $32. For Uber, also made a drop here from about $60 to $40. I'd say that this is already a buy, given that November people were buying Uber and Lyft for the reopening movements as people go back to work. Therefore, I'd say that Uber here at 47 will have a rally to about 55 in the next coming months. Lyft will also be the same thing. November, that was your support area of 45. This rally to 49, going to go back to 64 and 67. But as you could see, travel and airlines, these might be cyclical trends. It's not a secular movement. So this May 17, rebalance your portfolios. This recovery will continue an extension. What it did in September and November will continually happen in the next 2 to 3 months. You can consider in travel, booking.com as well, 2223. Airbnb, 140 below. Can consider department stores, Nordstrom, JWN, 37 to 40. It will continually resume. Even if they're up already 100% from November, I think that it will continually extend. Same for Macy's and Kohl's. That would be 15 to 18, 57 to 61. So I approve casinos and gambling, but But specifically, I'd go for the sports event related names such as Penn and DraftKings. For NFTs, I'd assume that Playboy and Funko will continue. Possibly less on Playboy, but Funko, because Funko is a resumption play on movies as well, not necessarily just about NFTs. Theme parks, I'd still continue with Disney and Shake Shack. No matter how bad the earnings were, I'd say $80 you've got a support buyer there after a drop from about 110. So take note, the beautiful parts about these reopening names, I prefer Airbnb, Disney, Penn National, and DraftKings if I can only choose four names, because they're set. I have a reason to own them on a secular manner, and they also belong in that cyclical reopening recovery trade. This is the charts of Nasdaq. I'm showing you the Nasdaq from January 2021 till December. I'm seeing that we're just in a choppy zone. This is your Nasdaq for your technology names. You're seeing Nasdaq actually trade from 12,000 to 14,000, and this is because all of your basic names, your Facebook, Amazon, Microsoft, Google, is masking the brunt of the tech sell-off. So the bulk of Nasdaq, about 70% of its weighting is in these FAMGAs, your Facebook, Amazon, Microsoft, which are hardly actually going down, which makes it actually less. It's resilient, but at the same time, it masks the brunt of the sell-off. What you're seeing here is that rallies close about 13,600 or 14,000 will really be shorted, and therefore we're still in the likelihood that after that short move, they're going to go down again and topple down again the next 2 months, which means that people will still continually sell your technology names. From the way I see the markets, in the short term, maybe this week, 13.6 to 13.7, you'll see people start shorting again. You want to wait for the rallies, however, to trim your longs. You'll have about 3% Nasdaq rally. I don't know if it's going to happen Monday, Tuesday, or Wednesday, but most likely this week. You have a rally to bounce from and a potential 10 to 20% movement in the stocks because they're higher beta. Expect Tesla as a key indicator, perhaps Tesla 680 to be shorted and sold from. NVIDIA 600 might actually be a key area of resistance. Enphase, for instance, might rally to 130, but people will short it back to 90 to 100 for a full reset. Even the XPengs, I'd expect a 10% rally to 27 and people will unload. Not everyone will actually wait for $30. As you could see from a charting perspective, from January till perhaps the end of December, you'll see Tesla consolidate with lower highs. Perhaps a rally to 660 to 680, people will short, and then they'll wait it out until maybe October, November. That's when it's probably nearing $520. So this 40% sell-off can actually extend to a 50% sell-off, which does not negate the secular long-term trend of Tesla, but it actually just tells you that this is a traditional one-year profit taking after a 10x move about on 2020. So my assumption is that for the rest of the year, for the next 6 months, this is May, until December, you won't see this tech sell-off finish. Or if it ever does full reset, you'd have to wait about June and July. You have to crash June, July to really see that the NASDAQ and everyone's burned in technology to see it actually start climbing up. My guess is either July or November. So around those levels is when you'll see the brunt of the sell-off of tech. And so if this is already hurting, if you don't sell on rallies this week or next week, you'll see further hurt next month. So this is NVIDIA. You might actually see a drop to $480 sometime the next 6 months. I like NVIDIA long term, but I'm just showing to you that the rest of the next 6 months is still going to be pain for technology names. Enphase will have some pain here at 130 to 140. Any rallies here will be shorted, and most likely Enphase from 220 will drop back to about $90 or $100. So don't think that this is over. This is a short-term rebound this week, and then another bounce, and then bounce to sell into, and then $90 or even $70. So be careful about these names. XPeng, I like it long term, no disagreement there. But I'd say that people might not even wait for 36. You've been seeing lower highs for XPeng, lower highs at 60, lower highs at 36. Perhaps the highest rally, you could sell calls at $30. You could sell calls at 29, 28, or even short some positions if it ever rallies above 30. So I'd argue that XPeng, they'll try to retest this no matter how good the fundamentals are. They'll retest this to as low as $21 next month or next month. So rallies at 28, you have to place a sell, or 27. And that would mean that last Friday's 10% run in a day could have another 10% run this week, but you want to actually unload and sell into that rally. Key conclusions: growth stocks are oversold, although bounces may be limited to a rally of a week and then sold yet again for months. You want to prefer cost averaging these growth stocks as your investments, meaning you like Enfis, you like Tesla, you like Nvidia, but you have to cost average for the next 6 months. Rotation, reopening names are extended but may continue to remain extended until 2 more months. You want to prefer swinging these trades unless they're Disney's, Airbnb's, DraftKings, and Pens, which you can actually hold long term for perhaps all-time highs. I'd also argue that cryptocurrencies peaked on Elon Musk's tweets and may never return to their previous highs. You might see that BTC $64,000 is the peak of the 2021 until a 50 to 80% drop, perhaps just as well as tech stocks will get pummeled down. So you want to short Nasdaq on rallies towards 14,000. That will be a relatively correct strategy. You want to short weak earnings on technology. That means fastly on a rebound to about $50 to $60 is a short. That will continually print money, especially gap downs in rally combined. You want to also sell high strike sell calls. It will print money in my view. Possibly remain bearish until the next 6 to 7 months for growth stocks. Market is in a trading range. Just sell high and then buy low. Or don't buy them low. Just wait for it to get crash and burn about 30-40% or approximately 70 to 80% from its peak. So this was the actual tweet of Musk. Elon Musk said that Bitcoiners are going to slap themselves next quarter when they find out Tesla dumped all the rest of their Bitcoin holdings, which is a $1.5 billion. Elon Musk just replied, indeed. It's a cryptic thing, but you have to understand that cryptocurrencies move on Elon Musk tweets. And therefore, the sell-off in the last 72 hours ever since cryptocurrencies have been falling 3 days already, and it's actually lower highs already for BTC and Ethereum and all the rest of the alt stocks. You want to actually check on market neutral stocks as well. 5G related telecom names: Eric, Nokia, AT&T, Verizon, and T-Mobile. You're seeing that these names are actually very resilient. Farming names: John Deere, CF Nutrien, CF Industries, Nutrien, Scott's Miracle Grow, Raven Industries. These farming names, even Tractor Supply, TSCO, should also be market neutral. Home builders are market neutral, meaning they can continue rising. Discount retailers are also going to be neutral stocks. Walmart, Target, Ross Stores, Dollar Tree, Dollar General. You can argue as well that fast food names and really consumer staple names are not going to be sold off by the market. Those Kellogg's, Conagra, P&G, Unilever type of names will not be sold down by the market in the next 6 months. So as you can see, Nokia here has a gap up on earnings and continuously strong. I'd argue that GME, AMC, Nokia, these quote-unquote Reddit-fueled meme names are still going to go up. Nice thing about Nokia is that it is not a meme name. It's actually cheap value-wise. It's actually a 5G secular wave. So people who still love Nokia might actually use this consolidation. If you take a look at Nokia's chart, it's actually a reversal and can rally to about $6 to $8 in the next 6 months. So look to that. Ericsson will also continually be uptrend. Notice the charts of Nokia and Ericsson, very strong. 12, 13, could rally 14, 15 over the next 6 months. Fierce rebounds, just wanted to say, we had a fierce rebound on May 14, 2021. The additive manufacturing group, Triple D, Nano Dimension, X1 Stratasys. Unfortunately, I think that these rallies are rallies for the next 3 days and then sold down yet again. Therefore, you have to swing trade them. Cannabis names like Grow Generation, Agrify will rise and then get sold down. Genomics and healthcare, Bio-Nanogenomics, Amwell will rise, and same as Teladoc will rise and then get sold down after a 10 to 20% move. Unlike reopening and department stores, sports betting, gambling, these could be sustained for the next 3 to 6, at least 2 months at the very least. It will continually move up, I think, by June and July. E-commerce, C Limited and Coupang will rise but then sold down. Gaming names, Unity, Gravity, C Limited, Skills go up and then sold down. NFTs, Playboy and Funko might actually range trade, in my view. Playboy will rally to about $50. Funko will rally to about $28. But I think that at some point, since cryptocurrencies have peaked, perhaps Playboy and Funko will also peak. Fintech names like Affirm, very oversold, will rebound, but at $60 to $70, you can consider shorting or even selling calls. Artificial intelligence Palantir will rise, but at 22, 23, 24, you might see people sell it off. Biodegradable plastics like Tanimer, they will get sold off at $20. So there will be a rally, but they will short this down. Bombed out SaaS like Fastly and Snowflake, I think it rallies this week and then gets sold down anyway. Wearables will rally. Secular wise, I like this sector, but this will already be sold down further the next 3 weeks, even 2 months on any rallies. Mviscope and M and Vuzi Himax, if you want to buy them on a 50% sell-off from May 14th price. They'll rally up and then they'll get sold down yet again. Crypto-related names, Riot, Mara, Humble, they will rally 20 to 30% and then get shorted. So basically, these fierce rebounds that you'll see this week, I think are going to be short selling opportunities or unloading or underweighting of your portfolio if you have any of these names. Streaming names, Billy and Fubo TV will rally this week and then get shorted. Electric-related names, Hire, New, FEV, CleanSpark, Xpeng, Neo, Li Auto, Add Lucid Motors there, Solar Edge, Enphase, Plug, F-Cell. They'll rally this week, about 20 to 30% in my view, and then get shorted afterwards. Similarly, I'd like you to also notice that the strength of commodities is exemplified and will continue to go up, in my view, and bought on any dips, whether it be steel, such as United States Steel, ArcelorMittal, POSCO Steel. As I said, housing builders will continually go up. Platinum, PLG will go up. Copper, FCX, silver, HL, aluminum, AA. These are mostly extended names, but it will mostly be bought on dips as the markets will persist on pushing silver, gold, copper, and metals for the next foreseeable 6 months. In that light, it also means that Nicolasia in the Philippines will continually be bought on dips. There are a few names that I think are relevant to take a look at. Xiaomi hasn't sold off, so it means that some of the big names are actually being bought by the market, just as what you notice with the Facebooks, Amazons, Googles. Every time they drop 30%, they're bought. So perhaps for China Tech in particular, Alibaba, JD, Pinduoduo, Xiaomi, although they will be sold off, I'm seeing that they might be resilient and range trading here. So I don't know if Xiaomi will fall 13, but so far it has been steady at $22. I haven't seen a strong sell-off in this mid-cap names like Pinterest or Twitter. So my fear is that this 37% could extend to a 60% drop. 58 could rally to 68 and perhaps would fall down further to 36. I'm not quite sure, but I'm a devil's advocate and actually is skeptical of an oversold bounce this week. Twitter can actually rally to 56 only to sell off at $40. So you have to make the assumption that the market will push the likes of department stores going up. That means Macy's, even at a 200% rise to $22, this reopening rally still has legs to go in the next 3 months. Can rally to about 25 or 22 at the very least. 18 to 22 is a substantial 20% rebound. So, therefore, by the way, since I said that crypto-related names are in a sell-off, you notice that Riot here is $80. I wouldn't be surprised to see this back to about $15 or $10. So rallies of Riot at 33 will be sold down this week. That prior support here, 33, is going to be the new high. And that will be continually sold down to $16 or $15. Another 50% drop on Riot blockchain, which means a 75% drop from its peak. So it's about going to be bottoming out at 80% or 75% lower. Meaning I'd see Mara at about $10 and rallies to 23 to 26 will be shorted. It's going to go back to $10. So my view is that you've got opportunities to go sell this week. Sell this week the companies that you don't like. I'd say that a lot of people will actually short cryptocurrencies this week. So that's it. I hope that you reposition your portfolios well and trim your overweight names on technology because the markets will sell them off in the next 6 months, especially in the next 2 months. Thank you very much. And that's it for you. Bye-bye.